It is Saturday morning in Chicago. It's almost 9 o'clock. We are on October 23rd, and welcome to the best Elliott wave analysis show on the internet. This is your host, the Cowboy, and this is Bitcoin Ethereum Elliott wave analysis episode 33. Can you believe it? All right, we have made new all-time highs in Bitcoin at about 67,000. That $65,000, new high. That high was taken out, and things are exciting, guys. I mean. Are we going to 100,000? Are we going to 500,000? What's going on? The price action seems to indicate that we should be continuing to move to the upside. We have new Bitcoin ETFs coming up. There's a lot of bullish news. Is this something that's going to burn a lot of traders, or is something that's going to fuel a rally towards the end of the year? So things are definitely interesting. So I'm going to start like we always do with our longer term view at the markets, and this is Bitcoin on a 2-day chart. You can see we are labeling this as a second wave, and we are looking for a larger third wave primary that can take Bitcoin to about $500,000 over the next couple of years. And this is just the beginning of the move. So far we only have a 3-wave advance. We're thinking that this will become a 5-wave here in the near future. So we're going to stay with this thinking on to the longer time frame that we are beginning to trend higher in this larger third wave primary. One indication that this is the correct trend is Bitcoin not coming back below this 39,767 low. And if that happens, then we have to adjust, and I'll show you a couple of other things that are still possible. This wave 2 can still continue to develop. About 65K, wave 3 has likely started. What do I mean by this wave 2 can continue to develop is if this becomes sometimes, some type of a flat, when this move out here, it's actually a B wave, and then you're still waiting for the C wave to develop, and that would create a larger second wave. So go ahead and take a look. I've made a video, I think last Saturday, about what it means and kind of how this move to new highs can actually become a B wave. Take a look at that. I'm not going to go into the details into this particular video. Here is the other account, and I've switched this one. I have one that was, I think, labeled as blue a couple of weeks ago. I also have another one that's called the black that actually changes a little bit the subdivisions starting from the beginning of Bitcoin, where this is actually a cycle 1 and 2. That's another 1, 2 in here, and we're actually working this kind of larger third wave primary that subdivides here as, as we're going in a 1, 2, intermediate, 3, triangle, 4, and then up in 5. What this does, and the difference between, the count that I've showed a couple of weeks ago, is that this allows Bitcoin to continue to trend higher and not necessarily calling for a larger fifth wave in the development of the price action. So go ahead and take a look at this, because this is another situation that can take shape where we're actually forming a running triangle in a fourth wave formation. I'll jump here in a second and show you how that looks on the smaller time frame. But what this does, allows us to move sideways. This is a B wave move to new highs. We call this a running triangle. Down in A, up in B in 3 waves. Then we're going to do a C, D, and E towards the end of the year, maybe beginning of the next year. But the final result is still higher, mind you, in a 5th wave of this larger third, and then we should fall into another 4th wave that's matching this decline. And then so on and so forth. Bitcoin continues to climb, it's kind of regular motive wave process. So here is a look at the smaller time frame on that, where I look at the 2-day chart. So 1, 2 intermediate, up in 3, complex correction in a wave A. Then you go up in B in 3 waves. You make new highs. This B wave could still take a little, maybe one more new high here to kind of finish up, maybe go to 70,000, and then pull back in the C wave. This will develop in 3 waves. Go up in D, down in E for a 4th, and then a push back higher here in this 5th wave. So I've also put here a time fib, which I think is very important to kind of allow enough time in this 4th wave to travel, right? And if you compare with the second wave, 1618 here comes, early next year, maybe by February or something like that. That's just kind of a standard move when you get a 4th wave. Usually you move between 100% to 200% in distance travel on the 4th wave compared with the wave 2nd. An important thing that I wanted to show you, and I know it's still about 7 days away, but since I'm not going to have a show next Saturday on Bitcoin, I kind of wanted to present this. We're 7 days away from kind of finishing off this month, and this candle looks pretty solid. And I'm thinking based on some of the smaller patterns that we have, that it will continue to remain towards its highs as we're closing off the month, which will indicate a continuation higher over the upcoming months, especially based on the fact that we've had a pretty solid rejection of this sell-off that we've had back in May into Bitcoin, right? So this was supposed to have some kind of a continuation lower. It never really materialized, and instead the market decided that it's time to get bullish, make new all-time highs, and this is what we call the failed bearish pattern. And every time this happens, you're actually looking for a much stronger move to the upside in the opposite direction, and I'm thinking this is kind of what's happening up here. It's really hard to stay bearish by the look of the way this pattern looks. So you would have wanted to see something, you know, like this back in here, or something that has a continuation lower, right, for this you know, big bearish candle to have any benefit to the downside. So you know, the fact that it got rejected, I think, tells us that this move is likely to continue, and we're going to probably move above 100,000 in Bitcoin in the upcoming months. Here is another look at the weekly candle, and you know, this is something that's a little you know, that's a little concerning. You know, we still have, you know, today and tomorrow on this candle on the weekly side kind of closes off tomorrow, and we're beginning of a new week. So this looks a little bit like a rejection, right? I would have liked the price to close on a weekly basis to new all-time highs, to give you that extra confidence that, you know, we are going to continue higher without having maybe a shorter term correction here. But the fact that on the weekly we're getting this, you know, type of you know, inverted hammer, almost like a kind of a doji type of a candle, something that we've had back, you know, back in April, could be an early indication that we might be selling off here in a second wave. So I'll show you on the smaller time frames. This is a 1-2, maybe another 1-2 out of here, right, and then a sell-off higher. So if this is a, you know, becomes a larger sell-off, and you know, you're getting below this kind of 44,000 and you're taking this swing low, you know, then this is the reason kind of why, because the prices were rejected on a break above 67,000. You create an inverted kind of hammer there, and this kind of indicates to you that the market was maybe overly excited into this new breakout, and you're actually falling back into a sideways consolidation pattern, like I've showed you a little bit earlier in that black count, and I'm going to revisit that here shortly in the next couple of slides. So here is a look at the internal of that move, you know, on the smaller time frames on the 12 hours. So the same complex correction here in WXY for the second wave, impulsive move, and this is actually a chart from back in October 9th. So this was a couple of weeks ago when we've done the previous show, when we were looking at this move to continue higher. Some of the subdivisions, you know, we still kind of allow them to develop, and actually this third wave continued to push much stronger, and we've made those new all-time highs. But we were in line with the fact that, you know, this is an impulsive move, and we should continue to you know, push the upside as much as possible in this, let's say, you know, smaller degree wave 1. So this is what happened, right? This was a 1-2 in this wave minor. Then you go to the minute degree and you go in a 1, 2, 3, 4, and 5. So if you've noticed, what I've done is I've changed the labeling a little bit here in the subdivisions, and I'm kind of thinking that this wave minute was actually done back into these lows, just because of the proportion of this larger third wave that I have on here. Now I still could switch this and go, you know, move this wave 1 back here towards this highs and then get a second wave, but this depends on kind of how we progress moving forward. Because if you look at this count, this third wave, based on this projection, you know, this fifth wave should not travel much higher, right? If you compare with this wave 1 of the lows, maybe we'll get some kind of an equality, can move up to about 70 to 72,000, and that can finish up this larger third wave. And what this does will actually make this third wave minor become kind of small, right? Elliott wave usually tells us that the third wave is the strongest wave in the sequence, is kind of the largest, and under these circumstances, it would be almost equal to the wave 1, which is fine, but that can still allow you to maybe change some of those subdivisions on the internal, and instead of, you know, the next degree down being down here, it would be up into the sides, which will allow for this larger third wave minor to continue to break to the upside and get much longer, right? So that will push that maybe towards, let's say, you know, 100,000, 120,000 once it starts to develop. However, you know, so far I'm thinking on a smaller time frame that it's likely that this fourth wave already has begun. And I think it's begun impulsively, and if you look at the, some of the charts, you could argue both ways. I'm gonna, I don't have the smaller degree charts here. I have them in the pro room there, where I look at it, as a wave decline from this highs. But I think there might be a way there to count it, as I was looking at this morning with the new low that we've made, that it could be maybe a double zigzag already completed. What I don't like the fact is that this is kind of short for a fourth wave compared with this wave second. So I think I'm gonna, favor that this fourth wave actually needs a little bit more room to develop. And it could become a triangle, it could be a double zigzag, it could be something complex here. But I think we're still maybe going to push sideways to down, for the next couple of days here, and see kind of how that progresses, no matter. And then once that's done, we can get another push up higher in this fifth wave to complete either a third, like I mentioned, or a wave one of these lows. So this is kind of what I'm looking here over the next few days, for a continuation in this correction and a move sideways, and then one more explosion higher, where people could get maybe excited that we're moving to new all-time highs again, and then you fall back again into another corrective pattern. So this is kind of what I'm watching, and I was actually kind of cautioning my subscribers and then saying, I think we're kind of getting close to maybe getting a little bit bullish on the Bitcoin, and which legs of this upcoming correction you can actually trade, and how you can actually trade maybe a move higher here in this fifth wave. So what I don't like is, I'd never like to kind of trade wave A off the lows. I like to wait for a B wave decline and then trade a C wave move. And then you can actually trade even to the short side. If you're thinking a larger C wave comes in this fourth wave, then you can get ready to short that C wave of fourth, and maybe come back here towards 55,000. So there's a couple of scenarios there on the smaller time frames when you look at the 2 hour, 1 hour, and there's like ways to take advantage at either via, the futures market or on the spot market. There's ways to kind of try to benefit from $2,000, $3,000, $4,000 swings in price, based on looking on those internals. So if you want to know more about those, come give us a try. I go in details about how you can actually trade some of these legs, and what are the signals to look for when you're trying to dive in and use Elliott with your advantage to to gain based on some of these moves that are happening on the smaller time frames. And here is the other look at the triangle, where you're declining here in this complex move. You go up so far just in a three wave. I mean, it's a clear three wave structure so far of these lows. You don't have a strong 5-wave impulse. And then, you would maybe push one more higher here again towards the 71, that equality between C and A, and then that would create a top in this wave B. Then you would come lower in the C wave, and then you go D, E, and this is kind of how you create a larger triangle. Now, on the video that I've done last week, I kind of run through arguments like, why do I think that this B wave is not actually B wave of a larger flat? And the fact, and one of the main reasons that is because of this decline back in here. It's a complex decline, and I don't see that happening very, very often, where wave A of a flat happens in a complex manner. Usually those are very sharp, and they go in an ABC, and that creates that W that you're looking for. Actually wave A of a flat, because flats are A, B's, and C's. They're not WXYs, right? So for that reason, I don't think that the market is going to fall apart very sharply in a C wave. Those C waves of a flat, either a running or an expanded flat, they're very, very sharp with very, very strong declines, and I don't think we're getting indication as such at the moment. So my second scenario, besides the fact that I'm fully bullish to the upside and looking at this as a 1-2 to the upside, is falling back into this triangle and more of a sideways move rather than a heavy sell-off. I just want to kind of make that point clear across. And just a couple of slides that I showed you last week, a couple of weeks ago as well. This is a Bitcoin seasonality. We continue to remain bullish, keep the seasonality on our side, that Bitcoin, and this is another, kind of negative toward that kind of flat argument, the fact that you're actually, staying bullish towards the end of the year and beginning of the next year, based on what price has done before. The month of October, November, December, January are pretty bullish months, even February for Bitcoin. And then here is, the comparison with Ethereum, where Bitcoin actually outperforms Ethereum towards the end of the year. And that's kind of, one of the reasons, if you look at the Bitcoin seasonality, a Bitcoin dominance as well, where you can see that you're kind of bouncing off a, very strong support there. and Bitcoin can continue to benefit towards the end of the year. And as we're coming here towards the half of the show, here is what we do, guys. Go ahead and give us a try. Come up there for the month. You're probably going to love it. You're probably going to stick around for way longer than that, because I go in a lot of details, charts, and I explain wave counts and trades, and we do stocks, and sometimes I explain option strategies as well. There's an Elliott wave course. There's a lot of things happening in that channel, so go ahead and give us a try. I think you'll love it, and you'll stick around. So don't forget to subscribe and like this video as well while you're at it. So let's jump over and take a look at Ethereum. And Ethereum remains, I think, on a bullish trend. And as crazy as this sounds, I'm labeling this as a second wave, and I'm looking for this thing to travel much higher in this progression. So wave 1 cycle, wave 2 cycle terminated last year in March, April, and then you go in a 1-2 out of there. You're kind of retesting the breakout line, and now you're going in another 1-2, and you're just beginning this larger third wave advance to the upside. So this is a look on the longer time. This is a 3-day chart. So I think there's plenty of reasons here to continue to remain bullish, and to continue to look at the structures and being impulsive. The other count that's kind of my second alternate there is the fact that this can fall just like Bitcoin, maybe into more of a consolidation sideways. You're looking at this pullback as being a second wave at the lower degree. You're going up in third. This was a 261.8 multiple of this wave 1. Then you come down in a complex A wave. You go up in B in 3 waves, C, D, and E, and you're actually moving sideways both in Bitcoin and in Ethereum. And you move into the next tier, and you come maybe in a complex C wave. Things are going to start to kind of look very funky. The wave counts, overlapping, all kind of battles between bulls and bears over dominance here, and see what happens. So this is kind of the next count I would go to in case we're starting to fall apart and not continuing to rally to the upside here, as I'm kind of projecting. And then what I want to draw your attention as well on this 1 month chart, because I think this is a very powerful chart. If you look at the couple of rejections here on the monthly charts, I've talked about this prior as well, and then you follow with the bullish month, you have a very small kind of bearish month of September, which really didn't have any continuation to the downside. It was more like almost like an inside month. Obviously, you made that another high there, but it was very well contained, that sell-off, right, in Ethereum. And now here you come in the month of October, and you're trying to push and maybe close to new all-time highs, right? So to me, this pattern is extremely bullish. It's very hard to look at the structure and say this is a bearish pattern, right? It's clearly trending upwards. We're making kind of higher highs. We're making higher lows in that every single month. So that means that we're building that pressure for a break up higher. So looking at the monthly chart, and it's very important that you step back sometimes and you look at this type of a price action to keep you and help you to stay, kind of bullish on your counts, right? This kind of gives you the hint, that when you count on smaller time frames, you should look up and not down, because the larger the time frame, the better the sentiment that you're getting on where the market is actually trending. If you look at the, where we've been, last year, what is this, January, and March of 2020, right? Look at this thing. It's been continuing to climb higher. So this monthly candles were telling you, to remain bullish. Now, mind you, you've had that sell-off, right, in April here for a couple of months, but without any traction to the downside, right? So this shows you that this level was retested, that those highs from 2017, and they held, and now the market is ready to move to the upside. So to me, this is a bullish development, and we can think that there's something bearish that lingers out there. There's always is, right? But if you are clear about looking at price is moving higher, and this is the only thing that you kind of have, right? The bulls are in control of this market at the moment. Let me take you over to some of the smaller time frames in here, and this is a chart again from October 9th, where we looked at this decline in this WXY. Then you go up here in this impulse in this wave 1, you pull back in a very clean ABC, right? Just a simple zigzag, as clean as it gets, into a 50%, and now you're starting to rally to the upside. And I've talked about this a couple of weeks ago, and we were looking for a move higher in this larger third wave, and here we are, a couple of weeks later, taking out those highs, re-challenging this wave 1 highs as well. So this wave 3 here that I've showed you back here remains in progress right here, right? And we're starting to kind of build up those subdivisions. And I'm thinking that maybe, just because of this is a little bit shorter than it is in Bitcoin, right? And Bitcoin is a little bit higher. So I'm thinking that this subdivision here maybe makes a bit more sense, where we're actually approaching the top on this wave 1. Maybe we're done already and we're starting to pull back a little bit in this wave 2nd. I can mess with some of these counts back in here. I don't think, I'm necessarily kind of ready to do so just yet. I still want to see kind of how this wave unfolds here and kind of how it develops. And then I'll be ready to start to label. See, don't rush to label. At least that's my advice. Don't rush to label things too soon. Let the market kind of, walk you there. Let the market kind of show you a little bit, based on the size of these corrections, what's the proper way of labeling things. Because sometimes, because we know Elliott wave and we're rushing to jump on a 1 hour, on a 2 hour chart and start to place, very small internal waves. And most of the times, those are kind of wrong. Just kind of wait for the market to show you what it is. And then once you get a little bit of a better structure, then you start to kind of place them. You start to get arguments, evidence that happens. And then you're basically, it becomes easier to place the counts. There's really no rush unless you're trading on a smaller time frame and you want to look, very quickly, hey, what's this wave? What's this correction? Where am I going to go? I would suggest step a little bit to the side, let the market breathe, and then he'll show you exactly kind of what the count is. So, guys, we've come to the end of the video. Unbelievable, right? You can find me here on Telegram, Elliott Wave Cafe, public chat. That's the premium room that I've talked to you guys, about previously. On Twitter, I'm becoming more and more active. You can find me at Elliott Wave Cafe. Elliott Cafe here. Give us a try. Come chat with us. Any questions? Don't forget to subscribe and like. Leave me any comments. Any other thoughts you have about Bitcoin in the comments below. I'll see you guys in a couple of weeks. I don't know exactly what the next week video will do. Maybe we'll do some macro and look at oil and gold and some other things like that. I talk about those every single day into the program as we're doing our daily videos in there. So, we keep in touch with the market, the S&P 500, with the dollar. We're looking at yields, a lot of other macro information that kind of helps you and guides you to stay as much as possible on the right side of the market. So again, thank you guys for watching, for sticking to this channel. We've passed 3,000 subscribers. We continue to grow. I love it. I love you guys. Thanks for being here, and spread the good word, and we'll see you guys on the next one. Thank you for watching, and have a great weekend. Bye-bye.